first tick is pretty strong. So 70 points higher on Nifty.
It's a good-looking screen, right? Yeah. We're adding on to that 170-point rally that we had yesterday.
Second consecutive day of gains is what we are seeing today. 120 points higher on the Nifty.
Things looking a little iffy once again, especially on the banks index, right? I mean, that is the index which has been the trouble spot.
Nifty up 114 points, retaining quite a bit of the advances, but not close to the highs. There was a little bit of a cool-off, no denying that.
Hello and welcome to Markets Today, the show where we track about 6 hours of the day's trading action in just about 5 headlines. I'm Ekta Batra. Here are the top stories for this evening. Sensex and the Nifty rise to end at the highest level that we've seen in 3 weeks. CLSA upgrades its stance on India to overweight and increases portfolio allocation. Mutual fund data for the month of September shows an equity component of just under 3,900 crores. Mid and small cap inflows continue but at a slower pace, while money is once again pulled out of large caps. Interest in multi-asset and hybrid funds is solid, while the 16,400 crore SIP contribution is the best we've ever seen. CNBC-TV18 learns from sources that Norbm is likely to buy Escort's Kubota railway business for around 4,000 crores. Such a deal will allow Kubota's India venture to focus on its core product lines. Apollo Hospital tells CNBC-TV18 it is open to buying good assets like HCG as a part of its growth plan that adds 2,000 beds in 3 years if the price is right. It is also in no hurry to sell stake in Apollo 24/7, which is generating enough cash. Bank of Baroda slips after the Reserve Bank of India asks it to stop onboarding customers on its BOB World mobile app owing to supervisory concerns. MCX gains as it gets set to go live on its new tech platform from next week. Ucro Capital surges on an increase in AUMs on a yearly basis. All right, but let's tell you what we have lined up on the show for you. It's a packed show today. In Market Opinion, we have Dheeraj Agarwal, the Managing Director of Ambit Asset Managers. In Big Corporate Voices, we have Sunita Reddy, who's the Managing Director at Apollo Hospitals. Bowman Rustom Irani, Chairman and Managing Director of Keystone Realtors. All right, on to today's market action then. Dalal Street extended Tuesday's gains to close at a 3-week high. The Sensex gained nearly 400 points, while the Nifty ended over 100 points. Mid-caps fared well, but the IT stock series gains ahead of earnings. Prashant is here with the details on this.
Well, we came into this session on a positive note. The handoff from Wall Street, especially from bond markets, was a big thumbs up. Yields had dropped 15 basis points. That's a big one. Remember, bond markets had not traded since these events over the weekend. So the reaction was pretty emphatic. Well, you know, so we had a positive equity close. We had lower bond yields, oil, which was well behaved, and it was a good start. We got a good start. The market perhaps could not build on it through the course of the session. The Nifty was the better of the two indices as compared to the Nifty Bank. On your screen, Nifty Bank has been the trouble spot. It gave up gains almost 300 points from the day's high and closed just below a resistance level. Actually, the Nifty Bank has been lagging. It's not made a higher high. The hope was that the Nifty would be able to pull it up along with its own rally, but that's not happened today at least. Mid caps and small caps on your screen, came off the day's high, but closed about 0.5% higher. Hero, Wipro, Grasim, Ultratech, these are some of the winners in the Nifty large cap space. HCL Tech came off. Of course, earnings season kicks off with TCS. Adani Ports and LTI Mindtree were some of the other losers that we had. In the broader market, long list, Midhani, that is Mishra Dhatu, big gains. Lakshmi Organics, there was JK Tyre, a brokerage note, an upgrade. HBL Power, West Coast Paper, Welspun Industries, Shalby Hospitals, Gensol, the jeweler, that is Senco, continues its run. Maharashtra Seamless, Atul Auto were some of these names. Pullbacks in BOB, that was, of course, news-related. Central Bank, IOB, other PSU banks. ICICI Pru, JSW Energy and Quick Heal, which has done very well recently, also saw some pullbacks. I mean, it's taking day to, every day as it comes. Focus very much still on bond markets. We get Fed minutes later out of the US, but the big one, of course, is the monthly CPI number, but that's only Thursday when US markets open. Hoping for a continuation of what we've seen, well-behaved yields, dollar and oil prices when we come back tomorrow.
Okay, all right, Prashant. Thanks very much for that. On that note, let's get you some market opinion. Dheeraj Agarwal, Managing Director of Ambit Asset Managers, says that though markets are seeing intra-month volatility, it can still touch new highs again. He also shares his view on the IT space.
Interestingly, if we see last 3 or 4 months, every month we have seen some amount of volatility intra-month. And the base that the market is sort of showing strength at is almost 19,200 or 300 range. So just touches that level and bounces back. So long as that level stays intact, which is the base for the last 3 or 4 months, it's quite possible that market heads into a new high again. At this point of time, I don't think IT will disappoint because after the last quarter numbers, bulk of the weakness for this quarter is already baked in. At the margin, there could be 1 or 2 slight positive surprise, but I don't think there'll be too much of negative surprise from a surprise point of view. Nobody's expecting this quarter to be spectacular for IT.
All right, moving on, global brokerage firm CLSA has upgraded its stance on Indian equities to overweight category. The firm has increased its India portfolio allocation to 20% above the MSCI benchmark from 40% underweight position earlier. Nimesh Shah is standing by with the details on the story.
Incredible India. That's the big report from CLSA, wherein the global strategist Alexander Redman has today double upgraded India to 20% overweight versus 40% underweight earlier. Now, today in his note to the clients, Alexander said, and I quote, "Our previous country in underweight position on India worked between late of October 22 to March of 2023. But ultimately, we persisted for too long with our negative view, and that's going to change." While they have raised some concerns, they find 8 key drivers for India to upgrade to a 20% overweight now. So let's look at what's working for India's favor. They've identified 8 big triggers, which Alexander has highlighted in his note as well. The first being the rebounding of credit impulse, signaling a robust equity momentum. That's the first big trigger for them. The second trigger is more manageable energy pricing given the discounted Russian crude. So crude is going to be controllable going forward. Third, improving balance of payment and likely bond inflows that will support the rupee in the medium to long term. That's the third trigger. Fourth, India is going to be the strongest economic growth across all the emerging markets, and that will drive equity markets as well. Fifth, equities are still trading at a fair value, and their model suggests a further 22% upside from current levels. Sixth, a return of superior relative profitability metrics across emerging markets versus India. So that's a big driver for them. Seventh, a breakout in the EPS growth, which is strongly supported by a strong GDP as well. And last but not the least, the FI positioning. The FIs are still not overexposed to the Indian equities. However, they've raised some concerns as well. The first big concern is valuations. India's valuation relative to the emerging market peers looks unappealing at this point in time. And two, the RBI monetary policy inflexibility. So these are a few concerns as well. While CLSA is so bullish, they've identified 10 big stocks, which quality names in India, where they have a high conviction call as well. So the first name is Reliance Industries. A couple of other names includes Bajaj Finance, HDFC Bank, L&T, ICICI Bank within the financial names, Axis Bank as well, Bharti Airtel, ONGC within the PSU, SBI they're betting on, and Tata Motors. So these are the top 10 conviction calls from CLSA. So the big call from CLSA is from a 40% underweight, they have now turned 20% overweight on India, and they're betting big on India as well.
Okay, all right, Nimesh, thanks very much for that. So bullish outlook coming in from CLSA, but crude oil prices took a breather also after the market shrugged off concerns over potential supply disruptions due to the Israel-Hamas war. The reprieve came after Saudi Arabia reiterated its support for efforts by OPEC Plus to balance oil markets. Petroleum Minister Hardeep Puri is confident India will be able to navigate the crisis if supply lines are not disrupted.
If the crude oil prices go up, and this is something I said at ADIPEC also, which was much before the present phase of turbulence, then that has a very strong impact on the an adverse impact on the effects on the attempts at global economic recovery. That's one. Secondly, I think in the 5 days that the operations, Hamas, Israel, and these military operations, which look like getting escalated, I think the global markets will factor all things into account. And if the supply lines are not disrupted, hopefully we will be able to navigate through everything happen.
All right, on to the second headline now. Investors poured a record 16,420 crores in September into SIPs, or systematic investment plans, offered by mutual fund players. As per data from the Association of Mutual Funds in India, Fund flow into exchange-traded funds and hybrid funds rose in September on a monthly basis. Pavitra Parekh joins in with more.
Well, thanks a lot for that. Yes, the September mutual fund data just came out earlier today, and the numbers looking quite good. It's just under 13,900 crore rupees. Of course, this is sharply lower than what we saw last month, but remember, last month was a really standout kind of figure. So it's still good at almost 14,000 crores this time. Some of the themes really continue, where the large caps have, continued to lose money this time as well. So around 110 crores have moved out. So it is a smaller number, but that outflow continues this time. Mid and small caps are getting inflows, but for the small cap space, I want to point out, it is a much smaller number. So it's coming at around 2,700 crores in terms of the inflow for this month. What we had last month was over 4,200 crores for the small cap space. For the mid caps, it's been quite steady, around 2,000 crores in terms of an inflow. Now, let's talk about the debt space as well. This was, of course, on equity. There's been a big outflow in debt, of course, this time, led by what we're seeing in liquid funds. So the debt funds have seen over 1 lakh crores in terms of an outflow this time. So that is important to keep in mind. And the hybrid schemes have continued to pick up. This category has been picking up month after month ever since the tax changes were announced. So the hybrid funds now have come in at a multi-month high. That inflow is at around 18,650 crore rupees. Now let's talk about some of the, another sort of category which is very tax efficient, which is the multi-asset allocation fund. There's been a big jump this time. In fact, this is one of the figures that really stands out to me. So if you look at the figure for September, it's at 6,324 crores. What we had last month was just around 1,600 crores. So you can see the kind of interest that has built up in this space. And we've all been talking about this as well. For the AUM, it's pretty steady, 46.5 lakh crores in terms of the AUM. But the key figure which really has been very solid is the SIP contribution. It's at a record high once again, the best we've ever seen, at over 16,000 crores, 16,420 crores in terms of the SIP contribution.
Okay, all right, Pavitra, thanks very much for that. On to the third headline we're tracking today, and it's a CNBC-TV18 exclusive Norbm group is likely to buy the railway business of Escort's Kubota. This according to sources who say that the 4,000 crore deal is likely to be announced in the coming days itself. Sudarshan is here with the details on this.
On August 29, we had reported that Escort's Kubota was likely to sell its railway business. Now we understand that it's almost a done deal. Escort's Kubota is likely to announce the deal for railway business in a few days. In a deal which is going to be of more than rupees 4,000 crore, Escort's Kubota is likely to sell this railway segment to German company Norbm Group, which is into manufacturing of braking and safety-relevant subsystems for rail and commercial vehicles. Both Norbm and Escorts have been two major suppliers to Indian Railways. Orders in the recent past have been for Vande Bharat trains. Sources say strategically it fits for Escorts to sell this non-core segment to this German company. Another reason that is being looked at for the sale of this railway segment is Kubota, who is a majority shareholder in the company with more than 53% stake, does not have an exposure to railway segment, and it wants to focus on the core business, that is agri-machinery, or can say tractor business. On to the numbers, in FY23, railway business had formed 10% of total revenue of rupees 8,242 crore. And it has even healthy order book guidance for FY24, which stands at more than rupees 1,000 crore for railway segment. Regarding stock performance, it has seen a major run this year, with stock currently at a record high and has nearly doubled from 52-week low that it saw in March. CNBC-TV18 has sought comment from both Escort's Kubota and Norbm. Escort's Kubota is yet to reply, while Norbm says, as per its policy, it cannot comment on the specific deals.
Okay, all right, Sudarshan, thanks very much for that. We'll take a short break now, but stay tuned. We'll be back with all of the other headlines that we've been tracking for you this evening. Welcome back. You're still tuned into Markets Today on CNBC-TV18. Well, on to the fourth headline today. Apollo Hospitals rallied over 1% after the company plans to acquire partially built hospital in Kolkata. Well, it was besides that they have indicated that they would be interested in looking at other acquisitions as well. So they do have a capex plan over the next 3 odd years where they will want to add around 2,000 beds to the tune by spending around 3,000 odd crores. Well, separately, some important other statements which actually came in from Apollo was that they did evaluate HCG, which is the listed oncology hospital. This is before PE players came in. They will probably have a relook at HCG if in case CVC wants to exit. And remember that separately, Apollo has expanded its oncology vertical quite significantly. Now, in Apollo 24/7, which is the digital arm, they will reach operational break-even by Q4. Cash requirement will then reduce. They could be looking to dilute up to around 10% stake in Apollo 24/7. They could probably look to raise around $100 to $200 million. And they will look to exceed the GMV of around 3,000 crores for FY24. We did speak to the management. Listen into what they had to say.
We looked at Healthcare Global before the PE came, and of course it is a wonderful asset, very good clinical work. Having said that, taking over assets from PEs is not easy because we have a hurdle rate in terms of IRR, which is around 19 to 20%. But we will continue to look at these acquisitions. We have made bolt-on acquisitions, which is why, we're very confident of adding 2,000 beds. And in addition, our oncology vertical is currently at a run rate of 2,000 crores. So in terms of margins, in terms of return on investment, it is above 20%. If you look at the good things that are happening in 24/7, in the fourth quarter, they will reach operational break-even, which means that the requirement for cash has come down significantly. Having said that, I have always maintained that at the right valuation, we will be able to do a dilution. We do have interest in the stock, but we believe that, at the right valuation, we could do this. So currently, they are very self-sustaining in terms of cash required to grow the business.
Okay, so that's the word coming in from Apollo Hospitals. Staying with the entire hospital space, there's news from Bloomberg with regards to Aster DM, which has operations in India as well as Gulf, where Aster DM's $1.5 billion India unit has drawn interest from the likes of PE firms such as BPEA, EQT and OTPP. Aster is said to also have drawn potential suitors for the entire firm. It could be valued at around $2.5 billion in deal for the whole firm. Aster India unit suitors are likely to weigh a deal at around a $1.5 billion valuation. So maybe this could be something that could be on the cards. CNBC-TV18 has not verified the report independently. But on to the fifth headline today. Bank of Baroda slipped over 3% after the Reserve Bank of India barred the bank's mobile application from signing up new customers. The move is based on the material supervisory concerns observed during onboarding of customers. Abhishek Kothari is here with the details.
Well, as you mentioned, RBI has asked Bank of Baroda to stop onboarding their customers on the Bob World app. Now, Bob World is a mobile application of Bank of Baroda. RBI's action is based on material supervisory concern that they have observed during the onboarding of customers onto the app. So they have directed the bank to ensure that onboarded customers do not face any disruption of any kind on account of this suspension. Now, Bank of Baroda has also issued a clarification wherein they have said that they will further stop onboarding of customers on Bob World, which will be subjected to strengthening of processes that they will undertake. So they will work closely with RBI to address the concerns at the earliest possible, and they do not expect this action to have a material impact on the bank's overall business. Now, we have various brokerages who have written as to how much does this app actually contribute to the incremental business. So I've just accumulated all of them, which suggests that 98% of saving accounts are coming from Bob World, 91% of current accounts, 58% of fixed deposits, 42 to 43% of recurring deposits, 61% of credit card and 89% of personal loans are coming from this app. Back to you.
Okay, all right, Abhishek. And staying with Bank of Baroda, the board has approved raising up to around 10,000 crores via long-term bonds. The bank said that it will float long-term bonds for financing infrastructure, and affordable housing in single or multiple tranches during the current fiscal and beyond. The approval comes a day after the Reserve Bank barred the bank from onboarding new customers via the bank's mobile application. All right, we told you first, and now it's official. Commodity exchange MCX will go live on its new platform from the 16th of October. Mock trading session will be conducted a day before. The exchange said that it may continue having 63 Moons platform till December and use it as a backup. The MCX stock hit a record high today. Sudarshan Kumar is back with us with the exclusive details.
MCX stock today hit record high after company confirmed our news break. It has announced going live on new software platform being serviced by TCS from October 16, and for the same, it will conduct mock trading on October 15, in which members can participate, validate setup and connection. Remember, SEBI's technical advisory panel had approved the shift to new platform on Sunday, that was October 8. For reference, we should know that MCX will continue to have the platform of 63 Moons till December, which it will use as a backup if needed. Besides this, CFMA's petition before Madras High Court in relation to the tech issue in the new platform is pending for the disposal. That case is now likely to be heard on November 29.
All right, Sudarshan, thanks very much for that. Moving on, TVS Motors gained close to 2% after DAM Capital raised its target price on the stock. The brokerage firm believes that the company's export contribution has nearly doubled in the last 5 years. Sonia is here with the details.
So, DAM Capital came out with a report where they have raised their target price on TVS Motors substantially, and it is quite perplexing. I mean, their target price is 3,051 rupees, while the stock is currently at about 1,550, and they've reiterated their buy over there. They value the core business at 35 times FY26 to about 2,826 rupees, and they added 225 rupees for the subsidiaries. Now, they believe that there is huge margin expansion potential for TVS Motor, and hence there's a likely re-rating in store. They are seeing improving return ratios as well, and TVS Motors gradually emerging as a big export engine. Export contribution in TVS Motor has now doubled in the last 5 years, from 16% earlier to almost 30%, with a volume compounded growth of 13.5%. So the mix is improving, exports have picked up, and there's a huge target price upgrade that has come in from DAM Capital, and hence the stock is up and about today.
Okay. All right, Sonia, thanks very much for that. On that note, it's a wrap on this edition of Markets Today. Stay tuned for more news and updates through the rest of the day.